Well, finally, on the earnings front today, Kenyan tea and coffee producer Sasini reporting a 61% rise in first half pre-tax profit, which it said was mostly due to higher tea and coffee sales and better tea prices, although it did cut its dividend. CNBC Africa's Laban Cliff Onserio spoke to Managing Director Dr. Caesar Mwangi for more on the numbers.
This growth is mainly attributable to two things. One, we are very fortunate in this particular financial year that the weather had improved. There was increased rainfall compared to the same period last year. That's the first thing. The second thing, because of that rainfall, it means that our production levels in both tea and coffee improved. The second thing is that the tea prices have also been on an upward trend. We had a very good, a fairly good realization from our tea, and the combination of the higher production plus the higher prices led to increases in both turnover and profitability.
You mentioned coffee, and you see your production has decreased from 100,000 tons to 40,000 tons. What's affecting this production? One,
coffee is, unlike tea, coffee is not a mass consumer product in this country or in many parts of the world. And what we found that in the year 2010, 2011, there was a big spike in the price of Kenyan coffee. Okay, it's a very good quality coffee. The quantity supplied is not too much, so it has been used to blend with other coffees, other cheaper coffees. That spike, I think, has discouraged a number of consumers, a number of buyers and the big roasters overseas. They have somehow tended to avoid the coffee. Second, the fact that we as a country do not produce too much coffee means that many people who are looking for our Kenyan coffee do not get it.
What measures has Sasini introduced to deal with this dwindling coffee production?
We are currently doing all that we can to look at the use of the inputs that we're using. We are currently moved into what we call precision farming in our coffee plantations, where we are looking at specific needs of the coffee tree and testing our soils to see where are the deficiencies in nutrients. Where we identify nutrient deficiencies, we apply the required amount of nutrients, and that is what we call precision farming. That will reduce our use of inputs as best as we can. We have also gone into water harvesting, very important for us, because we cannot control the weather. But we know that when the weather is not good and the trees need water, we can at least use the water that is available. And we harvest a lot of water. We have a very good water harvesting system, and we're using that water to ensure that our production continues even when the weather is not very good. Okay? These are the main measures on the input side. On the price side, we don't have control. The world prices are controlled internationally. And unfortunately, if this trend continues, Kenya is currently producing between 40 and 50,000 tons of coffee per year. And 20 years ago, it used to produce 130,000 tons. Unfortunately, and I don't want to predict doom, but we may go down to even less if those prices are not high enough to cover the costs of production.
Let's talk about the tea sales, which accounts for over 70% of your top line growth. Recently, you announced that you're opting for direct tea sales over and above the Mombasa auction. However, we are seeing that the Mombasa auction is fetching good prices, with the kilo going for 300 shillings. Perhaps you might want to reconsider this strategy?
The bulk of our sales go through the auction. But we've also got certain buyers, and in our case, we have a number of buyers in Europe especially, who would like a consistent supply of our specific tea lines. Okay? They then prefer that we divert some of our teas from the auction to what we call the direct sales. Now, for us to do that, we have to have a little bit of a premium, and we negotiate a premium with them above the auction. That premium also contributes to our profitability, and if we can get more of those buyers, we'll be happy to work with them so long as we have a sufficient supply of our own teas. We have to strike a balance, okay? Because also we need to have a presence in the auction, and people know that they can also get our tea in the auction, and they will always come there, and when they're seeking our teas, they will get it also. So we have to strike a balance between the two.
Seeing that you're largely an agricultural company, you own huge tracts of land, and recently you announced that you might want to diversify into real estate. Are these plans still on, and what's the progress?
Laban, you do mention correctly that we have a lot of land around Nairobi in the coffee growing areas, especially in the Kiambu area. It is common knowledge that in that Kiambu area there is now the bypasses that is opening up the city is passing in that coffee growing area, and we have seen an increase in the real estate developments in that area. Now, naturally, this has led to an escalation, a huge escalation in the price of land in that area. And the question is, should Sasini continue growing coffee in this area, or should it also continue or consider the possibility of real estate? We have in the past said that we want to keep our options open. We have gone out to seek possible change of user status for our land in those areas, and we need to have our options open. And I still maintain we need to have our options open. We are still considering those possibilities, but we do not want to go to the market and tell them that that is what we want to do until we are sure that that is definitely what we want to do, and we have a plan as to how we're going to do it.
Lastly, Dr. Mwangi, what's your outlook for the half year ahead?
Outlook, as you can see, our turnover has improved, our profitability is improving, and this is mainly due to the two reasons. The weather has been good this year, so compared to last year, we expect we should do better than last year. The prices of tea have been fairly robust. Unfortunately, as I said, the real challenge we've had is the prices of coffee. And when we talk about producing about, in the first 6 months, almost 1 million kilos in the first 6 months, for example, and 1 million kilos, you lose, let's say, at least $1 per kilogram. That's 84 million shillings off the top line, wiped off. And you can see if this happens to the end of the year, we're talking about 100 million plus getting wiped off our top line, and our bottom line also losing something if the costs of production still remain high. So we as a company will do our best to improve efficiencies and maybe try and at least not lose money on this. But I think our next step is really we need some national intervention.